U.S. Weekly Review Script. Here's the scorecard. 5 U.S. calls. 4 finished green on a close-to-window basis. That gives the model an 80% hit rate for the week. The best close-out winner was ALT at plus 5.1%. The cleanest execution was the first PWR call on April 13th, up 2.8% with less than 1% max drawdown. And the biggest intraday opportunity came from ASPI on April 17th, which pushed as much as 11.4% above the reference open. The first thing that worked was PWR. This was a high-quality setup because the thesis was not vague. Quanta already had the backlog and the AI infrastructure demand. Reuters had already tied the company's 2026 guidance to strong AI demand, and the stock kept printing new highs. That is exactly what a first-order AI infrastructure beneficiary is supposed to do in a supportive tape. The model was right to like the name. The second winner was ALT. This one was different. It was not a clean event-driven breakout. It was more of a sentiment repair trade supported by existing fundamentals. Altimmune laid out its 2026 plan in March. Jefferies kept a buy rating with a $28 target, and insider buying showed up in April. The model was trading improving risk-reward in a depressed biotech name with supportive sponsor behavior. That worked, but it also worked with the kind of volatility that should never be treated like PWR. Now the mistake. The most important error was ASPI on April 16th. The issue was not the story. The company had just highlighted the shift from R&D to commercialization and a $333 million cash position. The market responded, but the entry was late. The signal finished down 2.2% with an 8.0% drawdown. That is a timing and sizing failure. There was a second, smaller mistake too. The repeat PWR call on April 14th. The first call had edge. The second one had much less. Same company, same thesis. But after the first breakout, the asymmetry was gone. The second signal still ended slightly positive, but the return was only plus 0.7% and the drawdown expanded. That is what happens when a model does not penalize repeat entries. So what did the model learn? First, do not recycle the same ticker without a reset. A fresh catalyst or volume expansion needs to be there. Second, separate thesis quality from entry quality. ASP's story was live, but the entry was bad. Third, size by volatility class. PWR can take normal size. ALT and ASPI cannot. They need a smaller default allocation. Macro matters here too. On April 17th, U.S. equities pushed to fresh highs, and AI spending signals from TSMC and ASML remained strong. That means the tape was supportive. So when the model missed, the honest answer is not macro got in the way. The answer is execution discipline slipped. That leads directly into next week's positioning. I stay risk on, but not indiscriminately. I want to be more event-driven. I want names where fundamentals and flow are aligned, and I want much stricter rules for small cap and biotech volatility. The model needs to get more selective on the entry. Bottom line, this week the AI got several calls right, but it also exposed a critical weakness. The model can find the story. The next upgrade is making sure it only presses when the trade, not just the thesis, is actually there.